All right.
Think we're good.
Yep. All right. We should be live. Welcome everybody. 1 minute late. Happy Thursday. What's up, Kyle? How's it going?
Hey, everybody. Hey, Todd. Good. How are you?
Good, man. Let's do it.
Yep. Time to roll.
Yeah, another week that just completely flies by. But we're
Yep.
good. Make sure we're good there.
And we made it to Q4.
Q4. Holy cow. Q4. All right. Disclosures. Make sure you take a look at that. And we'll get rolling here. Oops. Come back and fix that date. All right. Kyle, you're starting. What's going on in Texas these days?
So just wanted to keep y'all updated with my weekend plans. Just went to a horse ranch for my wife's birthday, me, her, and the baby, in kind of near San Antonio. The town's called Comfort. Stayed at a horse ranch, went to a wellness summit at another ranch on Saturday where they were talking about just like being healthy, and the term they were using a lot was integrated wellness. So I was there, and I kind of started talking to people about the or seeing if I could talk to people about the similar perspective between what these ranchers, farmers, doctors, just influencers, and state people were talking about, and what we do at IEC with holistic wealth management. And kind of the summary is, we want to deeply understand the current situation, the preferences, the needs of the person you're working with, and whether it's health or financial. So I thought that was pretty cool to kind of make that connection.
That's awesome.
There's yeah, picture on the top right of the ranch that we were at. It was very nice, very Texas scenery, so loved it. And it was green. It's been raining this year, so not too dry. And then one other cool thing, I got to meet, some of y'all know her name. She's a former UFC title holder, Misha Tate, and she had a really big fight against Holly Holm. It was like 2017 when she won the title. So that was really cool getting to meet with her and talk about what she's been doing. And Todd put a note in that I definitely should have got a picture with her because we're virtual and y'all would want to see that, but I didn't. But we did have a good 10-15 minute talk and got to know her, really down to earth lady. So it was awesome.
And I can't help but see the conflict, pun intended, between holistic healing, healthy living, and UFC fighting. But that's good.
Exactly.
And then, how
Yeah.
do you not get the picture
So
of her like with her fist up against you? Right? You're like, that would have been awesome.
I was too busy not trying not to upset her in any way.
Probably a good
I
point.
don't need to get beat up, but yeah, it I'll next time I'll be back. And also one more thing, they had probably the best bread I've ever eaten in my life. And quickly, if y'all want to learn, this was probably the coolest thing I learned about like how to prepare food and how you can do it better. But when you mill flour to make bread, it has a ton of depending on the type of grain, ton of vitamin E, ton of vitamin B, but it starts oxidizing the second you mill it. So it loses 40% of its vitamin E, and vitamin E is like one of the best vitamins, treats, prevents all sorts of things. Destroys 40% of the vitamin E just one day after milling it, and over
Wow.
90% of it within 3 days. So if you actually want nutrients from your bread, you have to you either have to enrich it, which is what store bread is, or you have to go find a mill and get the fresh flour, or get like the wheat that you would then mill yourself.
That's
So
interesting. Wow.
super off topic, but thought it was cool to learn. Yeah.
Good to know. Good to know. I got to look more into
Yeah,
that. My wife only buys me
right.
sourdough now. She's like, that's the only somewhat healthy
Yeah,
stuff. I got to look into that.
yeah.
All I'm
I
allowed to
love
do.
sourdough.
I do too. Uh, Sourdough and eggs in the morning, or sourdough, some peanut butter and honey. I guess that gets my
Yep.
sweet tooth, but good,
I'm
good.
butter and honey and cinnamon on my sourdough. It's the
Yeah.
best.
All right, good stuff, man. That's cool.
Yeah,
I like to talk more. I mean, we talked about it, but that's really. I'm glad you're doing that. And that's especially to
yeah.
instill
It's
good
fun.
eating habits for your beautiful baby, and
Exactly.
lead
And
by
I'm
example.
I'm gonna have to lead by example by the time, in the next couple months when she starts eating people, not formula and all that. So,
Yeah, exactly. All
yeah.
right, from Texas to New York. Game three, wild card, Texas, or sorry, Texas, New York, Boston tonight, 1-1. Great game last night. We kind of thought about going to the game tonight. I was going to bring the boys, our friends in Saratoga. We were going to go, but they pushed it to 8 o'clock for the other game. So I think we're going to be watching home. So we shall see. Um, Other than that, what's going on in the markets? It's been an interesting week. I think we're in an environment where good news is bad news. Sorry, let me say that again. Bad news is good news in the stock market. And I think we're all learning that there is a divide between what's happening in the economy, geopolitics, and what's happening in the markets. There's quite a divide going there. So some of the headlines that you're being hit with, but we're going to talk about the stock market going to new highs, slowing labor market, housing market sagging, government shutdown, which just happened yesterday. ISM manufacturing came in below 50 at 49 and change, which is still in contraction territory. Consumer confidence is also in decline. Gold's making new highs, and we're seeing a rotation into healthcare stocks following the news out of the White House and the housing sector. So I was trying to make the analogy with Michaela Schifrin on a super icy GS turn here. We're just trying to hold the edge on a slippery slope right now. And bad analogy, the market is reaching for gold, which another aside, I think it's important being that we're inside Edge Capital. Lindsey Vaughn gets all of the headlines in the press. She is the ex-wife of my buddy who we coach together here in town, Thomas Vaughn. She gets all the headlines because she's very good at capturing the headlines. Michaela Schifrin, by the way, she's the winningest female alpine athlete, winningest alpine athlete of all time. She's won more World Cup races than any male or female. She's still in her 20s. She's going to continue to go. She is dominating the sport, and she's incredibly marketable. So you'll see more of her. But anyways, so this is the analogy that the market is reaching for gold with all these headlines that are hitting us. But if you look inside of some of the stuff we've been trading in active opportunities, which is our speedboat portfolio, not tax conscientious, we're in, we're out. I mean, there's a lot of AI related infrastructure, energies, chips, NVIDIA making a new high, but also software. There's still this underlying theme in the market with this AI build out that's absolutely ripping, despite what's going on in those headlines we just showed. So, got to keep that in mind as an investor and someone who may consume the everyday news. You've got to be able to separate that in our mind. Kyle, how many clients who have come to us in the beginning saying, "Oh my God, the world's falling. I read the headlines every day. Let's get out of our stock market positions." What say you to that?
Half, maybe half.
Half. Wow. Wow. Yeah. But I mean, isn't it crazy? Like everyone's like, so many people come to us. And again, I keep saying this, but like we're talking to a very in tuned group segment of the markets who watch what's happening in the economy, but also in the markets. And like they're very in tune. And sometimes, sometimes they let their political or let's face it, TDS is a real thing, Trump derangement syndrome, more than half, as Kyle just said, come in and say, I can't be involved in the market because of all the bad stuff that's happening right now. Pick up on
Yeah,
that for
it's
me.
just it's just it's like an existential reality of following the markets every day and following the news every day, which is the news is its own animal created to like get you to read and get you to want to follow. So you just have people fall into kind of these emotional cycles of whatever's going on, whether it's valid, which a lot is, or whether it's not, which it's an overblown fear that kind of never materializes in the market or even in the world. So um, that that's part of the reality. It honestly, like, unfortunately or fortunately, honestly, it creates the what we call the risk premium. It's the what return you get for taking on the risk that you see out in the world. So when things look more sketchy out there, there's more of a risk premium because you have the effect of people that were invested that said, I don't want to sit through that risk. They sell, lowering the price. So it's just one of those things, and it's why we focus so much on education. It's why we talk about these things going on with the world, why we you know let clients have our cell phones, and we want to talk to them as prospects when they're coming on, and as clients, to make sure we understand what kind of biases they have, what they're worried about in the world, so we can prevent these things happening and getting an overreaction. And I mean, everyone has their different triggers, so it's like person has this one thing that bothers them, but there's like 99 other things going on that are bothering other people that don't even affect that person. So it's something you have to work through and understand yourself to avoid that pitfall.
Well, well said. Very well said, sir. All right, let's go into the geopolitics. Notwithstanding everything Kyle just said, um, just a couple of, some of the overseas stuff. Let's just hit this up top. Ukraine is U.S. reportedly expanding intelligence sharing for strikes to go after Russian energy infrastructure. And one of the themes you're going to see in today's report is, energy is on the decline. Certain parts of energy are in downtrends, but other more new age that are powering the AI boom are in uptrends. So it's interesting. Trump's taken a hardline approach towards Russia in recent weeks, trying to end the 3-year conflict. But again, they're working a little bit more closely with Ukraine intelligence shares to go after Russian energy infrastructure, and then Israeli Gaza. They call for a last opportunity to exit Gaza as they're looking to intensify efforts. But we're not really seeing it manifest in the global macro trading capital markets as you might expect. This is a kind of a fun. I spent an extra minute or two on this graph. Kyle, it's funny. My kids are using Canva now in class, so they were upstairs.
Nice.
For the kids are off today for the Jewish holiday, and
Mhm.
for those who to celebrate. Hopefully, you're enjoying a nice day. But I was showing them how cool Canva is, and we kind of had some fun, and the boys were a little frustrated. The camera was like, dude, we can have so much fun with it. So the boys and I put this
So did
together.
they make this?
No, I did, but I was showing
Okay.
them what to do. So
I
we
was
took
gonna say I like the boarded up
the
door
boarded up.
you
Yeah.
had one.
The kids thought it was so funny. So yeah, we put the boarded up door over the White House. Sorry, we're closed. We got Trump and Schumer pointing at each other. So yeah, so again, negative headline, but if we look into it, what are the implications of the shutdown? On average, based on the research I've done, shutdowns the last 8 days. JP Morgan put out a note. There's a 70% chance this one lasts more than 2 weeks. We'll see what happens. No non-farm payroll this week. I read there's about a $15 billion impact to GDP, which really comes down to 0.2% per week. But once they reopen, usually, that money that was saved or the impact on GDP, negative impact is made up very quickly. So once they open back up, it's pretty negligible. Um, and I hate to say, in the last 5 shutdowns, the S&P was higher each time. So the stock market, we're trying to make the point here in the first couple minutes that the technological boom that we're in has very little to do with what the government's doing. Maybe not including, though, or I would say not acknowledging the recent investments that the government has put in certain, rare earth mineral and energy producing companies that help secure our energy supply chain. The two have very little to do with each other, so just keep that in mind. So this is an S&P 500 chart, daily, hot off the press, probably less than an hour old, and yeah, we're at all-time highs right now. And just you look at the little pullbacks that we've seen, that it's really just a story of two steps forward, one step back, two steps forward, one step back, two steps forward, one step back. When does this end? I don't know, but there's just a constant supply of buyers coming into the market on every little dip. I mean, this gray line is just the 20-day moving average. You just take the closing price of the last 20 days, and just kind of tends to be a little bit of a push through, snap back above, push through, snap back above. And we didn't even get below the 20-day moving average, let alone the 50-day. Again, this is just the average closing price. 647 in the SPY is the average closing price the last 50 days. And there's the 200-day. So the market continues to be in an uptrend. And, this is just the reality, the awesome reality of the markets, with so much negative headlines, that we're being inundated with. And yet the market makes new highs. So the market, you've got to remember, discounts 9, 12, 18 months into the future, depending on the studies that you look at. The stock market is not trading based on the news today. Markets are trading based on what the expectation of news is 6, 9, 12 months in the future. So we're not trading today's news. Today's news was being priced into the market 6 months ago. So that's why it's so, I hate to say it, but sort of naive to trade today based on the news that's being reported to you now, because markets are so unbelievably efficient, and they have the ability to discount, sometimes rightfully so, sometimes not rightfully so, what was happening 6 months ago. Okay. And Kyle, just jump in anytime you want, man, of course, as always.
Yep.
So we're at 99% chance of another 25 bips cut in October. We're now in October, which is unbelievable. So about 3.5 weeks away from another 25 basis point cut. And I know that's really small. See if I can zoom in on this. We're at 47% chance a month ago of 25 basis point cut in October. A week ago, we went to 85%. Yesterday, we're at 99%. Today, we're still at 99%. So the chance of another 25 basis point cut doubled in the last month, which, again, the Fed cutting into a stock market at all-time highs with sagging labor market and the other macro negative headlines that I mentioned is creating this kind of very potent explosive cocktail of stocks that could absolutely rip higher, much to many investors' dismay, who are not yet involved and are so wrapped up in the headlines and with, if Trump derangement syndrome and half the country is quite real. People just don't understand how the market continues to rip. And you look at Schumer and Trump at each other, shutting the government down. You say, wow, how can the stock market go higher with so much, disagreement between the left and right? And the two are unrelated issues.
Yeah. Yeah, so this slide, this is a new news out of today. Or I guess it was today or yesterday. FICO launched a program that would allow it to bypass the traditional credit bureaus to give information to mortgage lenders and resellers. So before, where FICO had to work with the bureaus and pay a markup to the bureaus, and add costs to the buyer, to the mortgage taker. This will be making the process more efficient. And this program applies specifically to mortgages, but we were talking about the premium on current mortgage rates and the 10-year yield. This would be kind of a measure that should be expected to decrease that premium cost on mortgages. So a good move if you are a consumer, or if you're a FICO employee, because it's up 20, or investor, it's up 20% today.
The stock is ripping today.
And the credit bureaus are all down, I think, anywhere from 5 to 12% or so.
That's pretty funny.
Let
me see if I can pull that in here. What did I do? FICO, Fair Isaac Corporation.
Fair Isaacs.
Yeah. So this is the daily chart of FICO. It was in a pretty clear downtrend, and then this news came out. It was trading $1,500 a share, but now it gaps up to 18 to 1900. So
yeah,
up 20% today, which is massive on huge volume right there. So we're gonna have to look more into that story. Any other? I know this is just hit you this morning, but from a personal planning and from a CFP's point of view, is there anything that is in your mind that how would this impact our investors?
I think it'll affect anyone looking to move. I think the other benefit is going to be kind of the housing market in general. Anything you can do to lower the financing cost. I mean, when most people take mortgages, you've pretty much any commercial deal that goes through, commercial building, that's going to be financed. So I think it's going to have broad benefit to the market and economy.
Very cool. Very cool. All right. So we're hitting you. It's not like anytime we put these presentations together, we try to weave a story throughout, and we try to make it with some degree of continuity, and have an opening, a premise, try to support it, have a closing. This is just kind of the market we're jumping everywhere. We just went from personal credit scores into gold. It's just kind of the market we're in right now, which that's fine. Sometimes the markets trade on a lot of theme and have some reason behind it, but it's kind of just everywhere right now. So, we're going to talk about gold and Nvidia making new highs today. So gold, over the last 18 years is up significantly, right? And we just in the last, this is a daily chart. So, no, excuse me. These are both 18-year charts. Sorry. So this is 2021, 22, 23, 24. Gold miners were underperforming, through 2008. There's the big sell-off, 2012, 2014. But just recently have they begun to attack the 2011 highs quite significantly. These are the gold miners, and this is gold futures on the same time frame. So there's 2007, 12, 14. So there was a period in 2020, 21, 22 is very quiet, and then gold broke out. Now, largely I've missed this move. We do have some gold miner exposure. We've got AEM at a 2% allocation in SIG. I did increase it in the last rebalance. We've got Wheaton Precious Metals, WPM. We also have Southern Copper, SCCO, that's moving higher. That's obviously not as much of a gold miner, but gold is moving higher. I mean, there's a lot of macro uncertainty, continued divestment out of the U.S., safety, central bank buying as globalization is being scaled back significantly, what they call onshoring or reshoring as production is being brought back. So they're, just trying to disconnect the globalization push that was, so prominent when BRICS came online, which is back in early 2010 area, Brazil, Russia, India, and China, which was a term that was coined by Jim O'Neill out of Goldman, who was crowned, or I would not crowned, who was knighted. He's, I guess, Sir Jim O'Neill. But, for all those reasons, and Kyle, why else is gold moving higher? Like, what else would you say is going on here?
Yeah, it's hard to say. I think alternatives tend to, I mean, not always, but they do kind of follow the stock market to a degree, um, which is kind of maybe counterintuitive. But also think there's maybe some financial risk out there in Europe right now. That might be part of it.
Yep.
And I know in China they've been buying gold like crazy,
Yep.
retail investors there. So I think
And that's a good
it's a variety of things.
That's a good point that you make too. There's nothing in this presentation, but the productivity in the GDP and the EU countries is falling. I'm concerned about Europe here longer term because of the growth outlooks.
Same.
Even though the stock markets, you look at DAX, up in the highs. I haven't looked at the CAC in a while, but yeah, productivity in Europe is certainly falling. We're gonna have to watch that. So yeah, I mean, we have a little bit of gold exposure, but largely I've missed it. I mean, it was very quiet here in 2022, 23, 24. But once we broke out here in the back half of 23 into 24, we've really been then going. So we'll see how far. I don't have a super strong feeling on gold going forward. And again, the miners just broke above the 2010 high. So you got to think about that. Like, let's say you had gold miners 2010. I mean, you just broke even here 12, 14, 15 years later. So keep that in mind. But, over the last couple of years, the gold stocks and gold miners and gold itself has been a good return. U.S. yields, what's crazy with everything that's happened since the 2022 fiscal and monetary response to COVID, Trump coming in, tariffs, everything we've been through over the last 3 years. It's crazy to think that U.S. 10-year yields, nominal yields, are at the same level as they were 3 years ago. So October 2022, U.S. 10-year yields are at 4.1. And we've been oscillating around that 4.1 level, and it's exactly where we are right now. So it's quite interesting. I have no idea, but I cannot wait to see which way they break, either higher through resistance or lower through support, and what the catalyst will be. I don't think we can know what it will be, or what combination of macro forces will break us out of this 3-year range, but it will no doubt introduce volatility to the market when it happens. I mean, they could go sideways for another couple of years. It's not inevitable. That's the way macro and specifically fixed income markets work. But, and I could ask Kyle, which way do you think? And it'd be nothing more than a guess, I think, with anyone. But
Hmm.
do you have a
For sure.
guess?
I think the economy is going to be the main driver. I do think if things slow down, they're gonna pull Fed's gonna pull rates down and cause the yield to go down as well. Um, but if that doesn't happen, if GDP stays higher, I could see it, you know, kind of hanging around in the fours.
In the fours, maybe just sideways. Yeah. So sideways to
Yeah,
lower is your bet.
sideways.
The only thing you missed out was higher. So 2 out of 3, you have a good
Yeah,
shot of being right.
yeah. And it a lot of the time when yields go higher, it's based on a increase in inflation, and that is usually based on like if you look at the last occurrence, it was based on major government stimulus.
Yep.
So the inflation comes after the stimulus, and so if we do see some systemic change and like fiscal policy, then I would definitely revise that expectation. I mean, I could totally see yields going higher if we saw some more spending or just some other kind of driver of higher yield, higher yields.
Well said. Well said. I'm just prepping. Somebody in the chat was asking about the dollar, a little bit of a
Mhm.
bid today, and I think I did not put anything in today's presentation, but when you talk about yields, you certainly want to talk about the dollar. I'll just throw the UUP ETF in there for now, which is the ETF that tracks US dollar. And he was making the point that the dollar's up today. Yeah. And again, if yields are moving up, that means the amount of money that can be earned by overseas investors in the US would increase. So that would generally attract dollar flows. Yeah, the dollar's up today, but I think it's just like the point we made in yields. The dollar UUP is extremely range bound. It hasn't moved since April of 2025, so the dollar hasn't done much. We could look at the dollar. The FX game is a relative game, so you got to look at dollar relative to the euro and the yen and Swiss. I don't know if I can do this quickly. Show all windows. Let me see if I can pull this over. Nah, it's not going to work today. We'll come back to it. But yeah, dollar is pretty quiet in 2025, so I wouldn't look too much into that. I think a theme that we're seeing also in the macro conversation is crude and energy is lower. So this is NYMEX West Texas Intermediate light sweet crude futures pushing the lower range. This is a daily chart. Oh, sorry, this is a weekly chart right here. So each one of these bars is 1 week of trading. So we've been around the lower 60 level in crude for a while, but I would say today and this week we're starting to threaten the 60s, and maybe we're looking at a 5 handle. So you could come and say maybe that's an outlook for lower demand, as all the heavy negative headlines are over our heads, or it could be a supply issue, and OPEC is threatening to increase production by 140,000 barrels per day. So OPEC quota hike. So this is from bar chart right here. Rich, I don't know how to pronounce his last name, being weighed down by the global outlook for larger OPEC crude production. Expected to discuss fast tracking its latest round of supply hikes in 3-month installments of 50,000 barrels per day starting November to return the remainder of a 1.66 million barrel per day supply cut. So I'm sorry to just read this to you, but it's important. OPEC is boosting output to reverse the 2-year-long production cut and restore a total of 2.2 million barrels per day production. And, again, this is, with the U.S. helping Ukraine go after Russia's component, Russia's supply, which has been significantly deteriorated. But, we have supply coming on, and, OPEC is trying to make a more competitive product with so much alternative energy and renewable energy, and specifically nuclear, which I think how nuclear is polling lately is vastly increased, especially with the AI data center demand for power. So I think nat gas, as I have in coming slides, natural gas is a big component for these data centers, and we're starting to see nat gas, which is very plentiful, and nuclear starting to be very much in demand. So I would not be surprised to see OPEC continue to increase supply, drop the prices to make crude more efficient, especially as electronic vehicles are really, I would say, becoming more and more accepted. Look at the stock chart of Tesla. Tesla just broke out. So OPEC needs to get more competitive. Gasoline, same thing. That's a pretty good technical break of support here. Summer lows at about $1.87 in gas. When a market tries to break down a third time or break out a third time, usually there's enough force to get it. So I would not be surprised, based on everything we just said, to see gas continue to go lower. Energy is interesting. Energy has been strong, but again, this is why I love looking at charts and get the context and perspective. Like XLE since 2022, 3, 4, 5, and now we're looking at 2026, has been so sideways. Like, look at XLE. Okay, this is XLE divided into the S&P 500. So if this chart is moving in one way on the downside, energy, XLE stocks, energy, underperforming the S&P, and that's been the case for coming up on 2.5, 3 years now, since late 2022. So, this is going to start a conversation, and I tasked Kyle to go put a basket of energy stocks, which a lot of clients come to us and say, I don't want the volatility, I want a high dividend yield. I'm scared of all these headlines that we opened with at the beginning of this. And you'll say, well, man, one, you've got to, it's the point we're making, try to realize there is a very large divide between headlines that are being jammed down your throat now and what's happening at the hard red edge of the chart in the S&P and the NASDAQ. There's a lot of time divide, and there's a huge disconnect between what's being reported and how capital markets are pricing and what's going to happen in the future. So, what we're going to try to make the point is, there's a lot of people who say, oh, I just want to make my 6-7% yield and be safe and that's it. Well, there's a lot more to it than that in terms of opportunity cost. So what are we looking at here, sir?
Yeah, so no free ride in the stock market. I mean, we have the top 5 energy stocks in the XLE here in purple. We have the total XLE total return. This is from January 2023 at 12% in the last 2 3/4 years. The S&P value ETF, so not just energy, but all value stocks in blue, and then the S&P 500 total index here in orange. So,
Dude, that's
I
crazy.
yeah,
The S&P is up 81. Value stocks since beginning 23 is up 50%. And the top 5 return for the largest 5 energy stocks, including reinvested dividends, is 17%.
yeah.
Wow.
So, I mean, it pays to be diversified. The safe stocks, the quote unquote safe stocks like energy. I mean, look at April 2025. I don't see any difference in the sharp decrease in the prices of all
Right.
these.
Like, you still get smoked when the market sold off.
Exactly. So what are you taking risk? What are you getting for the risk that you're taking? And then how much risk are you actually taking? If you're just in energy or you're just really in any one sector, you haven't diversified the risk of that specific sector. So if something happens and energy gets hammered, or materials or tech or whatever, however, wherever your concentrated position is, I mean, it could have been doing really well for a while, like energy did in 22. But things change, and you don't want to be on the wrong end of that.
And that's a good point. Like, and I don't want to sit here and bag an energy. Like, energy
No,
got
it's been
our,
great.
it's been great for Inside Edge Capital. Like, when we launched in October 21, um, we had 3 months until the market got hit with this big inflation interest rate spike. And, that's the benefit of active management. And, I've been studying these markets for 25 years. Like, I was like, okay, there's a pretty big rotation into value and energy. And we got heavy energy in 2022, and it really got our firm off to a really solid start, which gave us outperformance that, we're still looking at life to date since we launched. And it was great. Energy was awesome, but we also kind of recognized when the rotation was out of this energy, inflation sensitive trade, out of that, and then going back into more growth tech oriented. But since then,
Yeah,
like, what a waste of time, right? I mean, or just a huge opportunity cost lost here.
right.
So one, it doesn't offer safety when the markets spike. Two, like, even if you're in the value, not just energy, but even in value stocks, you're up 50% compared to the top 5. Which, did you use the top 5 XLE stocks?
I did, yeah, just the equal weight on those
Nice,
5. Yeah.
perfect. So I hope that, and then the thing is too, the power of compounding, right? So you missed out on 50% in just holding the value stocks, and then how much money is that over the next 20 years invested? Like every percent
Exactly.
matters, not just today, but the compounding effect of how much more your wealth manager can make in the markets, compound that over 20 years, and how much you can save on the planning and tax side. Like
Hmm.
it's not just pennies, nickels, and dimes today. That stuff adds up over years. That's why, like,
Yeah.
we fight for every 100 basis points additional that we can make or save for our clients. All right, enough of that. So we're just bagging on energy, but it's not all energy. New
Hmm.
position, just got upgraded by JP Morgan. JP Morgan doubles the price target for this booming clean energy stock, right? And this is a position that we just added. I took a little screenshot of Bloom Energy, BE. We just added it to the portfolio 2 weeks ago. We have it in active ops, and JP Morgan just doubled their price target, which we'll talk about in a second. So this is really cool. Check out the Bloom Energy website, and I just took a couple screenshots from their website. Speed at which a data center can become operational, reliably handle compute demands has become the top requirement for data centers. Why? It outweighs even costs and sustainability. So the race to AI supremacy is on, and no one wants to be a laggard. Swift deployment of reliable power is essential, since delays in power means delay in compute capability or capacity. So what they're doing is they're literally co-locating these um, power plants next to the data centers, and they're using it based on renewable energy, and they're powering it with natural gas as well. So there's a white paper I just downloaded off of the Bloom Energy website. And go sign up, whatever. I'm sure Bloom Energy isn't going to spam you if you put your email in. Technology companies are choosing on-site generation as a primary way to power operations and critical infrastructure rather than relying on the good old electric grid. They require enormous power ranging from a few to tens of megawatts for inference to hundreds of megawatts or gigawatts for training. On-site power is essential as the grid cannot keep up with the accelerating demand. It's just, it's amazing if you get inside of these power generation companies, and I'm trying to make a clear compare and contrast against traditional fossil fuel generators versus how energy demands are so powerful with the AI data center, and how the beautiful capital markets are adjusting and creating supply for the demand that is so much here. So that's why some utility stocks that we're holding in the portfolios are acting like growth stocks. They're paying 4% dividend, but the freaking things are up 50% a year. Like, it's bonkers right now.
Hmm.
Um, it's crazy what's happening right now. And again, comparing that to the overhanging negative macro headlines that so many investors are up nights worrying about. But Bloom Energy, again, BE, JP Morgan doubled their share price, and this is awesome. JP is standing by Bloom Energy. The investment bank maintained its overweight rating and more than doubled its price target to $90 a share by December of 2026. This is how awesome the markets are. Bloom is at $88 right now. Thanks, JP Morgan. Like, appreciate it. So their outlook is for 90. And by the time it gets there, December 2026, probably, I don't know. I don't know. We'll see where it is. But this is the breakout in Bloom Energy. Beautiful move right up to the price target. We'll see where it's going to continue. But, if you look at the fundamentals here, revenues in 2022, 1.2 billion to 1.3. Last year's 1.4. This year, we're looking to go 1.76, then up to 2.16. So you're seeing pretty consistent, 10, 15, 20% top line growth, but earnings are going to swing from clearly negative $1.62 for all 4 quarters, 1.42, a slight loss in 2024, another very slight loss of 5 cents in 2025, and then swinging significantly into profitability by 2026. This is how markets discount 12 to 18 months into the future. The markets are not trading based on what's happening today, but what's happening in the future. And you have to be able to separate that in your mind. Now, these are GAAP earnings, generally accepted accounting principles, not non-GAAP. Non-GAAP will be higher. These take into account different one-off administrative and salary compensation, different tax things. So these are conservative earnings, but this is a great example of the new age AI build out infrastructure being priced into the markets. So we put a 1% position into Bloom, and then another one that's related, Centrus Energy. We put it in SIG LEU, so we got a little 1% position in there. Also holding it in Active Opps. We look
And
at
Todd,
NVIDIA. Oh, go ahead.
I'm pleading ignorance. Bloom Energy, they do hook up to natural gas, but they also do hydrogen production. Is that right?
Yeah, and don't ask me much more because I haven't got into the specifics of where they produce and how they produce hydrogen
Yeah,
as a fuel. I don't know, and I've got to come back to you on that.
yeah. It's super interesting though.
I think it's worth it. Let's just take a spin. Oh, not Bloomberg.
And yeah, I mean, anyone who's played SimCity knows that nuclear and hydrogen are the best fuel providers.
Yeah, I gotta. It's
You
actually
remember
been
that
on my.
game?
I never played it. I never played it.
Yeah.
Um, I've got a game that's been sitting over there from Take-Two called Red Dead Redemption 4. I've had it for like 5 years. I'm probably 30%. I really want to play it at some point, but I don't know.
Yeah.
It'll take me a decade to get through it.
Yeah.
Uh,
That kind of
hydrogen
gamer.
hydrogen fuel cells for decarbonized blue solid oxide fuel cell technology plays a critical role in advancing economy to generate electricity using hydrogen fuel to generate a greener future. Role of hydrogen fuel. All right. Offer solution reducing. Yeah, that's fine. Hydrogen is advanced across numerous sectors: power gen, transport, industrial energy, building heat, power, and feedstock. Is uniquely positioned. All right, I got to come back on
And
this.
hydrogen is extremely interesting. It used to be more used, right? Like in 1900s or maybe
Mm-hmm.
1800s, weren't they using them with blimps and all sorts of stuff back
Yep.
then?
Yep. That was
Some
the blimp disaster in Jersey.
and new, yeah. And so, new technology, new ways to use it. That's obviously the play here, and bringing it back into a product that's bought and sold. So it's awesome.
Yeah, we got to come back to. But I mean, look at the drop down menu, and this is a little bit of another aside. We're going aside, but that's okay. One of the best things that I'm finding, Kyle, when I'm doing research for a company is, and I've said this before, but I just can't overstate it enough. Like, you look at the company, I look at the market cap, I look at earnings, I look at the forward valuation, I look at the proprietary ratings, we look at sales, sales growth, reported growth, I look at EPS, which is earnings, blah blah blah. I look at everything, right? But one of the favorite things that I have specifically in this kind of environment where there are certain companies that are showing unbelievable expected profit and revenue growth is go to the website. Just click on the URL and just go read what these companies have to say. Like, it's unreal. And you find out so much about the company. Like, go to the company website and learn about the company.
Mm.
It's just wild in here. There's so many
Yeah.
micro stories that are offering just massive outperformance. I mean, the stock broke out. I started talking about this at this breakout in August. I missed the entry and I'm like, oh, come on, give me a pullback. Give me a pullback. Nope, goodbye. So from 45 to 90 since August, the stock is double. Um,
Yeah.
but anyway.
Crazy.
It's crazy. It's fun though. I mean, that's the kind of market you are in right now is you've got to find these micro stories and solid companies that are industry leaders that are growing earnings, that are upping their earnings expectations. Analysts are way behind. JP Morgan just put a $90 price target on this. Thanks, bud. We're at 88. That was helpful.
Yeah.
Um, and the granddaddy of it all, Nvidia just broke to new highs. Nvidia is at all-time highs at 189. We talked about this last week. The analyst community is largely between $210 and $240 a share. Of course, analysts are always behind. It's comical, but you get a $4.5 trillion company growing revenues from 60 billion a year in 23 to 130 billion to 205 billion to 273 billion. They're growing their revenues top line. The largest company in America are growing 50 to 100%. Like, what? And you look at the earnings. Like, anyone who says this is a tech bubble of 2000, they have no idea what they're talking about. The earnings that are real, that are right in front of us, they're right there. This company is doubling what they're making every year. Next year in
Yeah.
2026, we're only going to grow 38, 40. And this is GAAP earnings. NVIDIA GAAP and non-GAAP are not that different, but the earnings here are real. Data center build out across. And I was going to make that point, like, and I'm going to stop here, Kyle. Like, hit the drop down on Bloom Energy. Look at the sectors that it's hitting: data centers, manufacturing, biotech, chemicals, education, healthcare, oil and gas, retail. Like, what did we leave out? Nothing.
Yeah, exactly.
Nothing. So I'm not sitting here trying to be rah rah, but like, this could get
Yeah.
out of hand on the upside. And Nvidia just broke to new highs. Like, is it? I cannot, unless something catastrophic happens, I cannot not see Nvidia hitting $200 a share. And we're still pretty loaded up on Nvidia. SIG, we have a 3.5% allocation in Nvidia because it does pay a dividend. TAG, we have an 8% position. I think we're still at 8. Yep. We're at 8% in Nvidia. And the S&P is like 7.7%. So we're like market weight Nvidia. Like, we might have to get up to a 9, 10, 12% position in Nvidia. Like, I really want to see what happens at 200, but this is interesting.
They might have to do another split, NVIDIA.
Yeah, could be. Yeah, seriously. Um, this was a fun chart that I saw. Job openings and the S&P. I don't know if it's directly related, but ChatGPT launched at the end of 2022. Artificial intelligence really come on very strongly. Look at the drop in job openings that are happening. And some who will say, look at the declining labor market. It's a sign of a coming economic slowdown, recession, or companies are able to operate a lot more efficiently. And, that's just propelling these stock prices to all-time highs. And there's news out here, it didn't make it in today's presentation, that, the top 10% in terms of wealth are accounting for 50% of customer spend, or, consumer spending, because the wealth effect is so real. Those who are holding stocks are significantly more wealthy than those who are not. And the divide between those holding assets and those working, the blue collar, is getting wider and wider, and jobs are being displaced with technology. So unfortunately, I don't know how this ends, but the divide between upper, middle, and lower is getting wider and wider. And I think technology is a big part of it. And also technology is incredibly deflationary. Technology makes these companies have to spend less to have greater output. And that's why the inflation expectations are, they're 2.5%. They're not that far from the Fed's 2% target. Like, this is the 5-year expectation for inflation. Markets are not pricing in significant inflation. And I think it very much is related to the tech build out. Sir, I'm done. That's all I can say.
Yeah, it's I mean, the labor market's so complex. There's that. There's, I think, um the effect of all the stimulus, the pandemic era stimulus. I think that might have cooled down a little bit. They did so much with the PPP, so I think that's part of it. Cheap oil, that's part of it. It helps. helps the labor market. So it's a very, very dynamic market right now, but it's good to see that while the while this, it's gone down, but the unemployment rate's still, very safely in the fours. So you gotta like that.
I wonder, remember we were
Yeah.
talking about like, what do we think the direction of US 10-year yields as it is in that 3-year consolidation? I wonder if it's down because I wonder if disinflation, which I think we're already fighting, which is increasing price levels at a decreasing rate. Um,
Mm.
that's called disinflation, and then deflation is the outright drop in prices. I wonder if it's deflation because of all the forces that we're talking about. Is what drops U.S. yields out of that range. Deflation will favor bond prices, rates
Mm.
down, bond prices up in a deflationary environment. It's not good for stocks, but there's this
Yeah.
balance between disinflation and deflation. Think about like a ball, going on a baseball analogy, you throw a ball in the air, it's going to continue to go higher, but at a decreasing rate of change. At some point, that rate of change is zero, and then gravity takes over. Um, that's the idea of disinflation rate, prices going up at a lessening rate, and then does deflation kick in, and will that kick rates lower? And we'll see what happens in the stock market. Deflation is not good for equities, but just
No. Yeah. I could see it. I could see a little deflation, especially with inflation being relatively high the last few years. I think, new competitors come in, new there was a lot of supply issues that caused prices to go up, and like at Home Depot, all the hardware stuff, everything getting imported, or materials. So I can see it rebounding and causing a bit of deflation.
hmm.
But
So
like you said, the Fed and the government are not that and deflation is worse for our economy, I would say, than
oh yeah.
high inflation.
Oh,
So
for sure. Yeah, yeah,
everyone's
yeah.
going to be doing everything they can, and then does crude drop through this support? I don't know if it can. I don't know if it can go much lower than it is right now.
Right,
So
right.
before supply dries up, because that's a big thing where a lot of the producers here in Texas and elsewhere are like, how do we make money at 60 a barrel? So I don't know if that can, and low oil, that's deflationary. So
Oh, for sure.
I think that might have exhausted itself, and that was definitely one of the things Trump did to bring inflation down, was to try to suppress the oil price, and other reasons he wanted to do
And
that, but that
he
was
ran on that, and I think you and I haven't talked
yeah,
about that. He ran on that.
yeah,
And just this nuclear thing. I mean, look at Cameco. Like, I mean, breaking new highs. Like, nuclear is coming on. Nat gas is
yeah.
is plenty available. Like, I mean, what are they? What are they? I mean, look at Cameco making for the year, all 4 quarters. Oh, sorry, screen share. I mean, look at Cameco. Like, for all 4 quarters, made 16 cents and 20, lost money the last 2 years, made 16 cents, made 63 cents, 27 cents in 2024. Then, oh, how you doing? $1.15 in 2025. Oh, what's up? $1.61 in 2026. Like,
Yeah,
what?
yeah.
That's
To Zayed's, sorry if I'm mispronouncing your name, but to Zayed's point,
yeah.
uranium is generational investment if nuclear adoption accelerates globally. I absolutely agree.
And there's the uranium ETF. I mean, look at
Hmm.
that. We're ready to break out here. Dude, the future is like, there's so much exciting stuff to trade. Where am I looking?
Yeah,
The nuclear stuff. Wait, where's the
yeah.
nuclear? I thought
And
I had a list. Go ahead. Sorry.
like my question with the whole AI build out, the whole energy, um, just progression in our energy systems, like, are we have we figured out kind of who the winners and losers of this are going to be yet, or are we still early in that process? It's just, you look at it today, and I mean, you see where stock prices are at, but then you look at the forward projections, and then how early in the kind of the energy transformation we are. And it's like, well, a lot of people, and maybe we're included, are saying there could be 1 or 2 years before it really finishes actualizing or gets to that point where it's like, well, here's, this is normal now.
But you know what? That's the beauty of what we do is so many money managers are just focused on the fundamentals. You know, I was born and bred a technical trader where you're looking at the price action and volume. Sometimes and a lot of times volume and price action on these charts, you can detect early movers with big size and big money putting that money to work. You let the market tell you. You know, you can look at multiple scenarios of which companies are going to be the winner, and you can go to the website. Everyone's going to claim that they've got the edge, but where does the volume come in, and where do you start to see, you know, someone with a real size deploy their opinion and say this is going to be the one? So it's like it's that you have to know the fundamentals, but you have to watch the footprints on the charts, because big volume and big guys who make decisions and fund these companies, they're like they can't hide. You're gonna see it on the price charts. Like, and I think quantum, as I was just pulling up, like, you know, I mean, I was like, let's look at nuclear stocks. Rigetti. Oh, it's up 14% today. Okay, perfect. Like RGTI making new highs. Look at the volume. This stock, these are daily charts. It's doing the 50-day average of Rigetti is 57 million shares over the last 50 days. It's doing 100 million shares a day at a $34 price tag. It like today it's already at 93 million shares. Oklo is doing, you know, okay, so it's $127 stock. On average, it's doing 18 million shares a day. Look at the accumulation in OKLO. TeraWulf breaking higher. SMR, nuclear. That one's not in. Here's a good example. You're not seeing an SMR, new scale power. You're not seeing institutional accumulation in there, because if you get inside the story, you're going to find that the expectations are not as strong in this company. It's important to look at what's happening in the stock. Nano nuclear, Centrus Energy, LEU. I mean, we have this one. Cameco, we talked about this one. Vistra. Yeah, it's kind of got a little quiet here. GE Vernova, this is going to be the largest utility out there. A little quiet in that guy. Constellation Energy is getting a lot of press lately. I want to add CEG to our dividend portfolio. You know, we're getting some decent volume coming in this, but you know, when a market tries a level 4 or 5 times 350, you know, there's going to be more institutional accumulation of this share. Not doing a huge size, but I'm going to be watching the news on Constellation, BWXT, like, you know, watch the technicals as well as the fundamentals is what I wanted to jump in on that. Wow.
Hmm. Absolutely.
All right. We almost had it over in an hour, but I think that was pretty good. Hey,
Hour and 2 minutes. That's not that
hour.
far over. Yeah.
Tadio, what's up? Check your phone. Sent you a read on the AI build out. Cool, thanks. Zayad, what's up? Uranium is generational. Investment of nuclear adoption accelerates globally because of AI and electrification. Well
Yeah.
said, sir.
Yeah.
Well said.
We talked about
Plug.
that.
Oh, I'll check Plug. I haven't looked at that one in a while. Is that one moving? And I know I'm not sharing screen right now. Plug power. Oh yeah, Plug's coming on. Another one. This is totally. Oh yeah, Plug certainly is. Another one's coming on. I don't know,
Yeah.
Kyle. Is the cannabis sector. You look at Tilray. This stock is like,
Tilray, yeah.
I don't know. Is there anything on Schedule One? Is there anything that's going on? Like,
I have no idea. Yeah,
okay.
I'd have to look into that. It looked like it, or at least Tilray it's been dropping since about early July, and then it started to come back. So I wonder what happened there, if
Dude, it was at 30.
probably a regulatory change somewhere.
Yeah, it was at 38 cents in June. Now it's at $1.63. It's come on huge.
Yeah.
So, all right.
Still not making money, looks like.
Yeah. Rocket Lab trying to break out. IO and OQ. Another quantum play up. A Lab's up 6%. Nice. All good. Active Ops having a good day. Bloom Energy quiet. DoorDash. We added increased DoorDash. I wrote about CBC Pro, Roblox, Palantir trying to. That's another one to even talk about. Palantir's back in the highs quietly. Vistra, Nvidia, Exxon. I don't love that. Life 360. This has been the quietest home run that I've had. Bitcoin, MP Materials. These are all the positions in Active Ops that you guys can follow. If you guys want to follow along our active money portfolio, it is the extremely expensive price for an app, push notifications, email, video, full transparency in the portfolio for $300 for the year. We used to charge $200 a month. Now it's $300 for the year. So you go to Inside Edge Capital, Insider Access, and then you go down Active Ops, log in right here. Learn more about Active Ops if you want to follow our fast money portfolio in real time. Okay. Great little intro to show you what we can do for 20, $25 a month. Can't beat that, right?
Nope. Good
All right.
deal.
Closing thoughts, man. I've been talking way too much.
Yeah, it's been a wild, or it was a wild end of Q3 as we predicted. September was going to be was probably going to push one way or the other. So we saw markets continue to go, and yeah, we'll see if we have a Dodgers Yankees World Series.
I'm sorry, Texas wasn't in there. Yeah, man, this is going to be a battle tonight. Boston is so good. I feel like
Yeah,
it's going to
and
be
I'm
Boston, LA, but
yeah, well, they are good, and I don't know if you know this. I'm a Dodger fan from my time in
from LA
LA.
days,
I have
yeah, yeah, yeah.
yeah, I have a Brett Butler signed baseball somewhere. So
Oh,
yeah,
nice,
so
nice.
I'll be happy if they win. I'll be happy for you if the Yankees make it and they win. So
Oh, I
can't
appreciate
lose.
it. It's a story for another time. But when I was working in LA, we were doing. I was working with like a wealth management financial publication company, and Lenny Dykstra, I had him as a client. I was hanging out at his house. He's a
Nice.
1986 crazy ass Mets player. They nicknamed him Nails, out of his mind. But
Yeah,
yeah, Dykstra and I were buddies. So I had, I was originally a Mets fan, but upstate kind of became a Yankees fan. So
you
all
can
good.
you can be both as long as you're not a Yankees and Red Sox fan, right? That would
Can't
be considered out of the question. Yeah.
can't do it. Can't do it. But there was a period
Yeah.
last week where we were rooting hard for Boston to beat Toronto because that would have given us uh, first place in the AL East. But then that
Better
quickly
standing.
shifted. Tonight's gonna
Yeah.
be a bloodbath.
That was purely business there.
Yeah. Anyway, all right, dude.
All right.
Good
We'll
session, man.
we'll
Thanks.
see
Good work.
everyone. Yeah, we'll see everyone next week.
All right. Sounds good, man. Take care.
Take care.